Hello, this is Dale. We continue to have profitable months through the summer of 2020. What I want to do on this video is go over two profitable credit spreads out of many that we've had. One was a bear call on the SPX weekly, and the second one was a Google monthly bull put. Again, my name is Dale Brethauer. I've been trading for over 4 decades. Hedge fund manager. I've been a guest speaker at many platforms. I've written 3 financial books. And I am the founder of the website www.optionsinfinity.com. We focus on credit spreads, which I believe is the very best way to make consistent profits in the market. I think this is the most and the best educational website available today. The reasons we focus on vertical credit spreads is you get great returns when coupled with high probability results. It yields monthly income on a consistent basis. You're going to have some losers, you're going to have some losing strings, but in the long run, if you consistently execute the trades, you're going to have consistent profits month after month after month. Again, they're high probability of success. What we are doing is we are selling premium, so time is in our favor. We are not selling naked. We're always selling one option and then buying one further out of the money for protection. One of the beauties about vertical credit spreads is you don't have to constantly watch the market. They are low anxiety trades. And again, you're protected from catastrophic losses because we are buying an option further out of the money, always. Now, the big thing is what we're doing is we are selling premium, and it's a known fact that the options decay very rapidly in the last 30 days. With the SPX weeklies, you can see that the weeklies, that premium evaporates very quickly. For our monthlies, it's very good, and we also do leap credit spreads. They're at about 90 days, and you still have this options decay that we take advantage of. There are 2 vertical spreads. One is a bear call, one is a bull put. And one is a bearish strategy, and therefore that is the bear call. What you're doing is you are selling one call and then buying one further out of the money for protection. With a bull put, that is a bullish strategy. What you're doing is you are buying a put and then, you're selling the put and then buying one further out of the money for protection. So we've got vertical credit spreads that can be used in all markets. If the market's going up, you want to use bull puts. If the market's going down, you want to use bear calls. A lot of times if the market goes sideways, you can profit from either one of these. That's the beauty of having vertical credit spreads versus just straight calls and puts. It doesn't have to exactly go in the direction you're looking. It can go sideways, it can even go against you a little bit, and you can still end up being profitable. The first profitable trade I want to share with you was a bear call we put on SPX weekly, and this was put on September 3rd, where we sold a bear call. We sold the 14 September 35.90 call for $7.45, and then we bought one further out of the money. In other words, we had the 35.90, then we bought the 35.95, which is a 5-point spread, further out of the money. And for that, we paid $6.58. So we had a net credit of 87 cents. Now, if you would have sold naked, you could have profited most of the $7.45. However, you're not going to make as much money as you do with the vertical credit spread, because the for traders, the market makers, are going to require a higher margin because it's a much riskier trade. Therefore, the return on margin is going to be better with having protection with vertical credit spreads, either bull puts or bear calls. You can see the chart here. What I usually do is I've got the regression line, the regression channel, and this is the ±1, ±2 standard deviation of that regression line. ±2 standard deviations means that 95% of all price will be contained within that point. So you can see when the price was coming up here on the SPX and approaching the +2, I was looking for it to revert back to the mean. It reverted back to the mean. It made a measured move right here. Once we have a measured move here to the downside is a lower high and then a lower low. We can put on a Fibonacci. Fibonacci takes you down to the 127. You can see it comes down to the -1 on the regression channel. These are the tools that we use. We use the regression channel. We use the standard deviations of that. We use the measured moves and Fibonacci's. That's all we do. That's all we do. And we've got a very profitable strategy. Now, what we did with this bear call is on September 8th, which was 5 days later, actually only 3 trading days, we bought back the bear call by buying the 14 September 35.90 call at 57.5 cents and selling the 35.95 call at 52.5 cents. So we had a net debit here of 5 cents. We had a credit starting out of 87. We had a net debit of 5 cents. I never like to take it all the way through to expiration. I think there's too much risk associated with that. When I've made my profit, I get out. So we had a net credit of 87 cents minus the 5 cents buying it back for an 82 cents profit, or $82 on one contract. We could have made 87 cents, but the 82 cents was 94% profit of the credit. $82 on one contract means that you're going to make $820 on 10 contracts and $4,100 on 50 contracts. The last thing I need to mention always is that past performance is no guarantee of future results. However, this is one of a myriad of trades that we successfully make month after month after month. Let's take a look at the bull put we had on Google. We got in, this was the end of August 18th. We sold the bull put. We sold an 18 September 1455 put and bought the 18 September 1445 put for $13.10. We had a net credit there of $2.85. Now, why did we do that? Well, we had a measured move to the upside right here. Measured move to the upside means you can put in a Fibonacci and project out a price where we think it might go to. You can see it was down around the -1, came all the way up to the +1. Then on the 26th of August, we bought back that bull put for a net debit of 30 cents. Net credit of 285 minus the 30 cents is a $2.55 profit, or $255 on one contract, or 89% profit on the credit. For 10 contracts, that means you're going to make $2,550. And for 50 contracts, you're going to make a whopping $12,750. Once again, past performance is no guarantee of future results. I do want to mention that we've been in business for over 10 years. I've been sending out alerts to my members. These alerts, since the inception of October of 2009, we have had 752 trades, averages about 14 trades per month. 564 have been winners, 188 have been losers, for a 75% win rate. This is unheard of in the industry. Not only do we have a very high win rate, but when we do have a winner, we win more than we have a loser. So this is a positive expectation strategy. Take a look at the return on margin for 2019 and 2020. You can see that, yes, indeed, we have losing trades. We even have losing strings. Here is the losses we had when the coronavirus scare first came out. I couldn't get out of a couple of trades and we fell down, but notice how we have rebounded. And over the 2-year period, not quite 2 years, we have profited very handsomely. Now, what I'd like to do is go over to my website and show you how you can become a member of Options Infinity. And part of our membership allows you to join us once a week for a members meetup. I also review all our trades on Thursday and Sunday. You're entitled to all the alerts. When I see an alert, I send it out to all the members, both text and email. So let's just go over to the website real quick. Let me exit this and come over here to my website. You can see we're in our 10th year anniversary. We're not a fly-by-night outfit. We've been doing this for a long time. If you scroll down, you can see here is a PDF file of what we do, how we do it. And all you have to do is just click on here to view it or download it. If you scroll on further on down, you can see some of the testimonials. How does a mentor speed up your trading success? And finally, what I'd like you to do is if you like what you see, I'd like you to become a member. You're going to get the entire masterclass suite. I teach how I trade the weeklies, how I trade the monthlies, how I trade leaps, how I trade stock, how I trade Forex. These are all available to you. Also, whenever I put out a trade, I'm going to send you a text and email alert. Once a week, we get together as a group, and I usually have a lesson, and then I go over all our trades. We've got plenty of time to answer questions and make sure everybody is on board. And then on Thursday and Sunday, I also review all our current trades. This is a very reasonably priced offer. I think you're gonna find that Options Infinity, you're gonna earn money while you're learning how to trade in this very difficult arena. Now, you're gonna see a green circle with a D in it. That is, if you click on that, you can become a subscriber to my YouTube channel. I've got a myriad of educational videos on there. Also, if you click on the video I show, that's going to start you on your journey to actually see what we do and how we do it. I've got a 12-part series
showing how to set up your charts, how to get ready to look for a trade, what tools you're looking for, some examples of it, and so forth. So I hope you take advantage of this opportunity, and I look forward to having you being one of my mentees. Bye bye now.